The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 22nd day of June. Remember yesterday I was saying that it was a really important session, but only if we can look back in a few days' time and see exactly what was happening. So now let's go through everything once again. The E-mini right now is up 12.50. You see it made that peak D in the Chapman wave at 27.96. Now don't get confused, it's a really simple technique. You merely count each successively higher peak, and the fourth highest peak labeled alphabetically on the way up and down, uppercase on the way up, lowercase on the way down. The fourth highest peak, labeled peak D, is where other things can happen. That's all you need to know. That was the premise. That was the original foundation for the Chapman wave when I was hand charting, and then it became a really important thing where I called the waveform the Chapman wave, the 7 wave form, and then I said, wait a minute, there can be higher waves, and that's where I developed this overlapping wave where we can you can see something go higher. But at D, other things can happen. Look at the weekly chart at 27.96, peak D, and look at that slump. I mean, that's a big move. So here we are. Within the context of the daily chart of the E-mini, it's pulled back. It had a number of, it had one, two, three, four lower low days. It had one big spike yesterday. That failed completely. It came down under the 9-period moving average, the black line. MACD is negative, stochastic's negative. On balance volume is trying to rally from an oversold condition. And what happened, I said to subscribers this morning to my opening call, I give a very detailed report every day, but I also show both in my newsletter and here in the den the parameters to watch. And I said at 12:30 today, if the E-mini needs to be, I shouldn't have said that, because now let me just find it right here. There it is. So it said, if at 12:30 p.m. Eastern Time, the E-mini is up tens, so up 10 or more, expect a strong close. And here we are at 11.50. That's not a big deal considering where we've been and how you've come down. So we've got 20 minutes to go. Let's see what happens. But what was most important is that I'm watching the weekly chart. This is Tiger Technician. This is more the analysis of the Chapman wave session always. So I'm looking at a peak C being formed today if there's no new high above the high of this week, which was up at 27.96, round number high, that was made on the 13th. I can't see anything to get us there at this particular point. The day is young, you never can tell. Who knows? Maybe tariffs are all eliminated and suddenly, no, this is what we're looking at. But to really get an arch formation, the second arch formation where we're looking at the lowercase h going to a lowercase m, I've got a real funny thing to show in a little while sent to me by one of our listeners about triple M. So here we are. We're looking at the up channel being resistance and hit. We're in the Chapman wave right here. Let me make this green so you know exactly what I'm looking at. The middle chart, green at the top, and underneath it just like 3/16 or less. Lower down, we put in a red one, and that's called the Chapman wave inside track repellent zone. But it got there twice the last 2 weeks. This week it's failed to even touch the bottom line, and it's pulling back. But it's still not a bad candle considering. I need to see a close below 27.40, and that's going to say to me, aha, now you've got that M formation. So next thing we're looking at is in the 120-minute chart, it's had a rebound in a single leg A to the upside. If that A starts to pull back and come into the 27, is that 52? Right, then it rallies to 27, right. So now it's at 27.65. Here are the numbers. Let me show you something. I'm overlapping on a lot of things here. In the E-mini, the 120-minute chart has made a peak B. It looks like it's going to try to attempt in this particular time frame. We'll see, to go above 27.65.50 for a leg C. You had a very sharp pullback intraday from 27.68.50 down to the low of 27.57 round number. We'll watch this closely because there are two patterns they could form. You know, the way I like to look at it, you always have to say what would be good, what would be bad. What would be good would be a push into the 27.66, 27.67 area that holds for at least 20, 30 minutes. But a pullback below 27.62 would be negative. All right, let's get on with our story. So this is going to be very important. Where we close today in that weekly candle, if we're much, much higher, I'm going to have to say, you know, that's really good action. So the bifurcated market's becoming even more bifurcated. Now I can go to the nitty-gritties already, what I wanted to talk about. The INDU, the Dow made a peak top at, why did I have it here, surely? Let me just see. Give me a second. I have to open this up a little bit more. Didn't I type that in? I'm sure I did. I think it's just being hidden. Yeah, there it is. On the 11th at 25,409, we went to leg D with a doji candle. We went short the next day, and that's going to be very important because so far, that's been a really big move to the downside because it's made this arch formation, but it didn't go at 24. Yesterday's low of 24,406 was, if you look at the left side, here we are. I think I've got it notated much better in this chart right here. In the Dow daily, we went to 2406. There was a left side, right side price time match, which goes to today, which said that we should, in this particular time frame, if there is going to be an exact match, we should be testing right here. We should be testing the low that was made on the 31st of May at 24,352. If that was taken out, we go to the low of 29th of May at 24,247. So far, this is a good bounce. We made a little bit high than yesterday's opening opening high, gap down. So that's kind of important because it starts with what we call a gray A. In the 120-minute chart, I had two readings, and that was very interesting. Very seldom we get that. One here, one here, and one here. I want to show you this because Technical Friday, I need to show you why I'm thinking this and what I'm thinking. So this completed a Chapman wave 5 to the downside yesterday and a trough D with a gap up today. Funnily enough, that became a D in the 120-minute chart on this one on the left. The same data from TradeStation gave me a peak, a trough E right here. Isn't that interesting? So now we've had a bit of a rally, gone above the 9-period moving average. We're testing the 14-period moving average resistance. This is going to be a very important moment. So I'll talk about that as soon as we get back. Now there's been a spike in the Dow to the 100, up 192, and you'll see that the E-mini has gone to that leg C in the 10-minute chart.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
The nitty-gritties. The nitty-gritty is that after 8 sessions, almost a record, almost the same as in 1987, I believe. I think there were then 9 sessions down sessions. This is 8 sessions and a very nice turnaround today, but not really great. It's just a nice turnaround, up 184. Really should be, well, the day's, yeah, but it should be up about 350 to 370. Then I would say, you know what? We could have a rally into next week, into next Monday, Tuesday, and then we're going to have to see. The weekly chart for the Dow right now is still giving me the lowercase h. There it is in the middle chart. The template I drew, the lowercase h that goes to lowercase m. I want to get rid of the 120-minute chart for now. And that monthly chart, we've got a week to go. We'll see what happens with this candle, because so far the candle is good because it went that much higher, but it's very poor as a candle in terms of the candle close. If the close today is very much like this, it says, wow, a lot of work to be done, so it doesn't take out the low. Sneezing, why do I have to? Excuse me. I'm not sure about the sneezing at 12 o'clock, 12:30 every day. All right, let's go on. So the Dow parameters are real easy to watch. Anytime next week, if there's a pullback that takes you below 24, we're at 24,644 right now, takes you below 24,480s, I'd say let's be real careful, because then we're on our way down sooner rather than later. But on the way up, you've got 24,800 as a 9-period exponential moving average. After such a deep correction, could you bounce? Hey, there are enough oversold stocks. So as it stands, I said to subscribers this morning, hey, take a little bit off. We've had a very nice quick gain from our short position. You know, a swing traders definitely take something off, but otherwise, for most of you, we want to hold the positions, but just reward yourself by taking a little bit off. All right. That's the short position. Let's go to the S&P. We'll do this quickly now. I want to get to many of the questions I had. 2791.47, the high on the 13th peak D. Remember, peak D is where we have to watch things very closely. Pulls back, making an arch formation. Hasn't broken down yet. If the S&P takes out the low of last Wednesday, so Friday, Thursday, of Tuesday, 2743 at any stage next week, be careful. This could go down quite a bit. So far, the weekly chart is holding a lot better than the Dow is. Now we're going to get to the, and resistances in the 2764, 2772 level. So now let's go to the QQQs. Now this is going to be very interesting. Why? Because we made that missing PD at 177.98. Everything about it said that this should be a pullback that is designated a short-term pullback, and that only if there's a close in about the 174s for 2 sessions, that would mean we've had 1, we've had 2 already. I need another close underneath the 9-period moving average. The moving average is at 175.85, trading right now at 175.49, down 22. I don't think I'll put a down arrow if we close weak today. I think I might need Monday as well for a confirmation, really for a confirmation, because it'll go from a sell signal to a sell mode. As it stands right now, I'm looking at this, and the 120-minute chart is given a sell mode. The daily hasn't even given a sell signal yet. I'll wait until the end of the day. I might designate it a sell signal, but only put the down arrow if there's one more close below the 9-period moving average. MACD's negative, stochastics under 80% to 75%. The on-balance volumes dropped very sharply. I'm looking at this, and now I'm going to tell you what I'm really thinking in terms of the NASDAQ. Look, Amazon's trading right now at 1731, up a whopping 1 point. Well, it usually does 14 points up and maybe 3 points down. This is different. We made a leg E yesterday, made a 1763.10 high, had a round number 1760. I spoke about this yesterday, open, and then it closed pretty much lower, but it held the 9-period moving average. Today, again, it held the 9-period moving average. And what did it have? Let me double check, things might have changed. It had a 1743 round number open. I'm making it real simple. If Amazon closes any session above 143, that's going to say, hey, be careful, there could be a test of the round number 1760. But if it closes below the 1721 9-period exponential moving average, just one session next week, that's going to be a suggestion that the MACD is about to turn down. It's already turning down. We have to wait for the end of the day, see if it crosses negative, and the stochastic is still at 86%. I need to see it under 80% to be able to put in a down arrow, I believe. But this is the hint to say there are a lot of stocks that are just like this that are making, I actually wrote down a bunch. I don't want to take time today to do it, other than to say, watch out. I think we're getting kind of toppy on the short term. The weekly chart is still really good. Monthly chart is outstanding. It's the short term that I'm looking at. I'm saying Amazon's becoming a little difficult, having a tough time. Just the last 2 sessions, not enough. It's a spectacular moves to the upside. Let's watch it real closely because it's a tell for me. Okay, next thing we're looking at here is the IWM. IWM right now is down 2 cents at 168.37. You say, hey, big deal, 2 cents. Hey, wait a minute. It made a peak E, topping the Chapman wave at 170.20. I shouldn't say top. It just made a 170.20 all-time high on the 20th. Yesterday, it opens lower than that. It opens at 170.08. It's kind of like a Chapman wave 2-bar reversal. Not good enough. It held the 9-period moving average yesterday. Like the NASDAQ, the QQQs is holding the 9-period moving average today. The MACD's turned down. Stochastics at 89%, very strong, but turning down. Relative strength lower than it's been in quite a while, at about 70%, and the on-balance volumes turned down. Spectacular weekly chart, leg B. Spectacular monthly chart for the week. There's a week to go. Peak D in the 120-minute chart. I'm looking at something very simple. A move in the IWM between now and Wednesday morning, Tuesday afternoon, Wednesday morning, above 169.45 says to me, this is the Goliath. You're not going to be able to slay this with a little catapult like David did. This is going to take quite a lot to be able to come down. But if it closes any day, just once, underneath 167.50, that's not even a point lower than where we are, that's going to suggest to me that this MACD could start to pull back to 85% and then you just need 2 more down days, and that MACDs are starting to turn down sharply, stochastics turning down sharply, and that's going to impact the chart in the final week of June. We're watching it real closely, and subscribers have taken a position in the IWM. First time we've done that, I couldn't even tell you how many years. So let's go to the gold. I want to just get these done quickly. Gold is now up 0.2, a lousy action after the candle yesterday, which was a nice reversal candle at a trough D. If there's a higher low today, and there is, it should be high. It should be really at this point, 1274 is at 1270.60. Days young, anything can happen, but the weekly chart says there's upside is very limited in gold right now. Just be real careful. If you look at the dollar was much weaker earlier on. Dollar DXY. Dollar's down 14 cents at 94.73. This is a fascinating chart. Reg D in the weekly chart. Basil Chapman, I'll be right back. Dow's up 174. Cool.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So let's just go back quickly to the dollar. The dollar's at 94.72. It went to a leg B. Now there's no other way because after F you can't go G, H. It just doesn't do that. It has to be B. Maybe it aborts. I don't know, but it's really holding very well. Stochastic 80%. That's good. MACD's kind of okay, but the price is holding nicely. It hit the right there. It hit the 14-period exponential moving average nicely. Bounced off it. bounced up above the 9-period moving average. I kind of like this. And the weekly chart, yeah, making kind of a doji candle for the close. But you know what? I'm looking at this and saying the MACD is still expanding. It's very good. And the stochastic is holding steady in the 85%. I like the dollar. That's all I can say. I'll change my mind. We've been long the dollar from 90. It's trading at 94.72. It hit 95.53. That's a spectacular move yesterday. Let me just put that in here so I got the date updated. So I'm just going to wrap things up here. 95. I like the dollar, and I think that gold is still stuck. Individual stocks are acting very well. Let's go to the TLT. TLT says yields are stuck in a range. Look, here it is. Yields still stuck in a range. We went along the TLT for a very brief period. Had a 0.5, half a point loss. I don't want to hang around. So this is it. The 10-year right in the middle is the one that really counts, holding in the middle of its range. The 5-year middle of its range. The 30-year towards the lower part of its range, but still holding very nicely. I'm just thinking trading range. Now, what's really important is wood, the iShares Global and Timber Forestry ETF, down, sharp move, 2 really big red candles. We've done that before. And then the very next week, you started the next bull move to the upside. I think this is going to be different. We'll see. And the home builders, arch formation, lowercase h, be careful. They are starting to fail again. So let me do a couple of things here. TLT, just crude oil quickly. Nice move in crude oil, up 2.91. Wow, it's even accelerated. That has to do, this to me, once again, political. It's not necessarily the reality, but doesn't matter. It is what it is. And therefore, you're back to the 200-period exponential moving average in the week. You have 64.34. That is now a fulcrum level. You could come down, you could go up. It's going to be hanging around maybe 2 points above, maybe a 1.5 below. It's stuck there. I said I would look. So the first question I had is look at the XLE. The XLE, nice gap up today. It's still making the arch formation in the daily chart. It went below the left side low. It's going to need a lot of work at 75, 73 to get to 77s. Going into the 77s really improves the weekly chart, which is still holding quite nicely, and the monthly chart. It's got a leg D, probably going to be a peak D if there's no big move up into the 79s this week. I'm just thinking that it's in a higher level range on the monthly chart, in the upper level range in the weekly chart, lower range in the daily chart. The parameters to watch, 73 has to hold next week. And if 76.50 is taken out on a closing basis, going into the 77s, that's going to be very positive. That, in fact, could give a headwind to the IYT, which I was asked about a question over there. And the IYT tried around and failed yet again at 195.54. This is confirming for me that there is a chance if we make the arch formation in the Dow and the S&P coming up this week. I'm watching it because that's very similar to the IYT peak C so far in the weekly chart. They'll see what happens. Parameters. Under 190, it's at 195.53, above 197, really good action. Below 193.70, not good action at all. Next question. Boeing. Oh, always the Boeing question. Boeing, I'm done with Boeing. I think Boeing's made a hat-trick top. I'm not 100% convinced, but I'm about 92% convinced that it's not going to make a new high in this phase until it's done completing its testing of even the 9-period moving average in the monthly chart of 317s. That's been my target for a while. Was wrong because it went to a new high, and then it made a round number 372 open after the 374.48 high, all-time high, turned down on the 7th, and it's been goodbye since. 40 points down. It's already 11, 12% lower. So that's my impression there. UTX, sure, I'll do UTX. UTX is what we're long in the opening call. From the 119s, it's 124.80. This is going to be key. We've taken a lot of money off. We've got a little bit left, and the reason I have left is now it's an experiment. Is UTX going to be able to hold any further weakness in the Dow? Will it hold maybe the 122, 121 area? And then when the market eventually turns back up, will UTX be a leader? I don't know. It's just kind of a question, and we've got a little bit left over to see if it's going to work out. EWU, I don't know if I've updated it, but that is EWU is right here. It is the iShares of, I think this is the British, yeah, this is the United Kingdom. So let me rather do this. I'll go to the DOW. That is the Dow Jones FTSE 100 basically chart. It's up 5.71, up 1.69%. Let me just double check at 344.45. I believe, yep, there it is. So the FTSE in real life is up 125 at 7,682. I'm trying to work out the ratio here, and it's up 1.67%. So they're working, yeah, 1.67% as we speak. It's up 5.66. Yeah, 344.40. That's the one I've got, but the chart pattern matches exactly what happens if you look at the FTSE. So this is a nice bounce, but it's saying in the daily chart, a lot of work needs to be done to get above the high that was made on the 15th of June. What's happening with the voice? Aha, nothing happened. All right. So here we are. It's got to go above 350 in this particular chart, and that would be above the high that was made on the 15th of June to really say, you know what, that weekly chart is holding very well, but going that much higher next week says fabulous action, and it's very good for the monthly chart. So I hope that answered that question. I don't know if I'll have it this weekend, but next week I'll go back to doing all those EWs, all the different indices. That is the indices based on the ETFs. They don't correspond very well to the actual price. The FXI, remember I said don't touch the FXI. It looks very weak. I think China's going to have a problem here with the tariffs and all. It's down at 44.10, up 44 cents. This is that pattern that we looked at in whatever it is. Oh, gold. Gold. Remember that gold chart? I was looking at it. No, yes, there it is. The gold chart. And I said, be careful when you make the Chapman wave propeller shaft. Pulls down, comes down. Was that GLD? I think I saw it a better. Yeah, it's the same sort of thing. All right. So it's the same sort of chart. And I would just say, I would not be buying the FXI. At some point, it's going to be a really good buy. I don't think just yet. So just be careful. That's all I can say there. Next question was Hector, radio question. Hector, you want to know about Cron? You asked me about that a little while ago. It was acting very well. I thought I notated it. I guess not. Well, whatever it is, I'm going to do that right now, live on the show. Here we go. Got a break coming up, I believe. Okay, when the break comes back, we'll do Cron, which is Cronus Group Inc. And you told me exactly what it does and all. And I said, oh, that's great to know. For the life of me, I can't even remember what it was. All right, so let's do this. Let's say, I'll do it when we get back, but it's trading at 744 down 23 cents. Basil Chapman, Tiger News is out.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yeah, so a couple of things going on here. We're looking at Cron, C-R-O-N. This is Cronus Group, and it's trading at 743, down 24 cents. It went to test the left side high of 8.15. That was on the 7th of June. Today, the high was 8.11. So it just missed it, and now it's down. So this is what I'm going to say. I believe that, Hector, I think you are still long. You've been long for a little while, if that's my memory. If that's the case, I'm going to say I would do nothing right now. I'd wait because I need to see if this is a cup formation and it pulls back even just a little bit more to under 739, 743 right now. Closes under 739. There's a real good chance it's going to retest the 650s. If it's able to close about 747 today, and on Monday it sort of gaps to the upside, or at least moves to the upside, that's the cup and handle that pattern that I would say is much more preferable to and favors the upside, because the MACD is still good, but the stochastic's down 50%. And the weekly chart has not crossed positive yet. I would say to you, if I was not in it, I'd be waiting at least 2 days. Remind me on Monday or Tuesday. Let's look at it again. I would do nothing now if it was a fresh position. I like it as a buy and hold and forget about if I felt secure that it was going to hold $6. It's 743. Give it a whole point. I just don't do that. 12% risk. I'd just rather wait and see if I can get it later on at a good price, ready for a pop to the upside. So I'm just saying to you, I'm going to hold off making any call on this. The monthly chart suggests that it should go to a D at some point in 2018. That's the reason why I say if you've got a long position, keep it. Let's try to keep that long position as long as possible. So let's remind me again, I'm saying right now, would I buy, would I sell, would I hold? I'd hold. I wouldn't be doing anything. And I definitely wouldn't short, well, $7.40. Let's just say it was 744. I still wouldn't short because it's got and just enough internal strength to say it's trying for the highs of the rectangle formation in the weekly. Next question is XAL. I think, No, I didn't. I did the IYT, which is the transportation average. So XAL trading right now down $1.23. You know, I'm just, for weeks I've been saying I'd seen nothing yet in the airlines, and it's amazing. I haven't actually traveled by air lately. My son and daughter seem to be traveling quite a lot. I haven't done it, so I can't speak to it, but I know the most recent time that I went, I mean, you're packed like sardines, so I don't know what's going on, but they are not making, they must not be making money. So just be careful. I did the transportation index, JBHT. Let's look at that, JBHT. No, I got to do this very quickly. JBHT holding one of the better ones, holding well because it's in the rails. Sorry, it's in the trucking area. So that's at 128.33. Now, quick questions. So I said that I would look at if a question was asked about the PPA. I am negative the defense sector, the power shares, aerospace, and defense. I'm negative, even though the monthly chart is still very good, holding above the 9-period moving average, made a peak E in the monthly, peak E in the weekly, leg D, and then went to peak D at 58.51 on the 11th. I am negative this, I'm negative Boeing, I'm negative all these guys. Think there's a little bit of peace going on for the next month or two. Am I seeing my IMs? Hi, Jerry in the back bay. Jerry, how are you?
All right. How are you?
I'm well. Beautiful day in Boston, right?
Right. Oh, perfect.
Yeah.
I'm interested in Comcast.
Okay.
An analyst said that they are going to drop out of the bidding.
I hope. Jerry,
the stock was 44 when they started bidding, and
Jerry,
and
I'm telling you now, as far as I'm concerned, Comcast CMCSA trading at 33.88 at up $1.09, made a peak E top in the Chapman wave in January at 44, round number high. That was a peak E in the weekly, and the daily is trying to rally here. I hope they do not do that. They better get their service better. People I've spoken to are complaining about Comcast. I've had trouble with Comcast. It used to be fantastic. Now it's intermittent. The other day, my program, 2 minutes before the program, the thing just went down. I wasn't getting my service. Let them focus on their business of what they should be doing instead of getting involved with other companies. That's just a personal opinion. But I'm looking at this and I think, yeah, it could bounce, but I don't like the chart at all. If you're thinking of it as a buy and hold, this is not, I don't see anything yet. I might see it maybe in a week or two, but at this point, it's just a bounce. It's a kind of a pathetic bounce. Jerry, I'd be real. Do you own it?
No, but I only found out a couple hours ago that they're going to drop out of the bidding, and they'll start a huge buyback program because they stopped buying stock when they made that $60 million bid.
Okay, so if they have a buyback program, that might make a change. So you know what I'm going to do? I'm going to say to you right now, 33.88. My immediate response is to say, let me look at it again Monday or Tuesday. Let it just sort itself out, and then I can make an assessment. As it stands right now, because it is so close to the low of 30 in the 31s, if you wanted to start a position because you know something fundamentally that you feel very comfortable with, I'm going to say to you, this would be the time to do it because you've got about an 8% risk on a small position, because if it starts to move from the lows and even gets to the 36s, that gives you some cushion. So that's the way I'd look at it, but I'd love to make the actual call in 2 days' time. I need to see over the weekend, I'll have a good look at it, but I think it's going to be doing some retesting of the 31 to 30 area. If you think you're comfortable with a 3-point loss, at 33.87, that's the risk, but there is a chance that it could move 3 points higher if everything comes together. But I'm really upset about their service. That's all. Personally,
All right.
35 is the because they used to be fabulous. 35 is the 9-period moving average monthly resistance. So that's what I'm going to say to you now. But let me do a little work on it. Maybe we'll look at it again Monday or Tuesday.
All right. Thank you.
Thank you for calling. So a couple of questions. We're looking at PPA, and I said I don't like it. XLE, I said that has a little bit. Oh, XLE. Let me just go back to that. That's the Select Energy ETF trading right now up 75.74 up to. This is a high-level consolidation in the weekly chart. I think I did this, didn't I? I think I like it. It's holding well. Would I buy it? Is the issue buy or hold? I'm going to say right here, I'm going to hold off for 2 days before I make a decision about XLE. But I like the turnaround. I just don't like the chart pattern in the daily. It suggests a lot of work needs to be done. So I'm going to leave that for the moment. It's better than the PPA that I was looking at. Next question is Triple M. I had a really cute email from one of our listeners. Where did he go? Right here. No, right here. Triple M. Oh, I'm not going to find it in time. I'll try to find it during the break about Triple M, and look at the lowercase, the arch that goes to an M formation. Look at the weekly chart. There's that M, the lowercase h that goes to a lowercase m. And yeah, it's Triple M. is forming a triple M at the bottom right here. So this is not good news for me because the Dow stocks, the cyclicals, UTX, as I said, holding well. It better hold 122s, otherwise there's a real problem. Triple M is a far worse chart formation. It was a leader up until January, and now it's been a loser. This is trouble for the Dow, I think. I'll be back. We've got a lot more questions. I'll try to get a rush through that at the end of the show. So there's one segment to go. Dow's up 168. S&P's up 11. Basil Chapman, Tiger Beats Dow. We'll be right back after these important.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget Steve coming up. Now, this is really important. Let me just go through this quickly. I've got Exxon Mobil here, 8170 up 2.01. So far, this is a bounce, but the weekly chart in its own way has been having alternative highs and lows and highs with higher highs and higher lows. It's trying to make its way towards 83.43. That's the 200-period weekly moving average, and then it might make a D. I'm watching this closely. I think it's holding well, a lot better than I anticipated because of the bounce today. If it was actually a little bit lower to 79, I'd say, oh, man, that's just failure pattern. But so far, this is a good bounce, and that's the question there. Now, Roku. We have one of our listeners who knows my Chapman way very well, except I think that, Bob, you got something a little different to me, but it worked out beautifully for you. Basil, one, sold the last of my Roku calls today, chart attached. Should have sold the last batch 2 days ago as it came off the peak D. I actually have a peak F, and I'll show it to you in a moment. There's an okay. So, yes. So, Bob, congratulations. You had a fantastic move. I wouldn't be complaining. But look, the peak D was made right here on the 5th of June at 40.47 in the daily Roku chart. This is Roku trading at 44.34, down 1.03. And then it has a parallel high, so that doesn't get counted. And then it goes on to a peak E, and then 2 days ago it went to a leg F at 47.64 yesterday on the 21st, and then pulls back sharply today. So I think you've got a good timing. So don't complain. You did a fabulous job. Congratulations. Now, let's just do a couple of things right here. The Dow, I think this is a counter trend rally. I think it's going to fail fairly soon and then come back down. I'd say to subscribers, let's stay in our positions. Swing traders, yes, you can get out of some. SMHs pulling back here, down 55 in a big day in the Dow, yet it's down 106.44. We were long. We've had fabulous positions. The SMHs, we were short, the big pullback, then long, then short. And then the last one we were long, we switched to short right after the peak E top. And now we are short, and that's the way I'm holding it right now. We began a short position at the high, was actually above the high of yesterday. All-time high of the IWM is down 39 cents. This maybe is just the start. I don't know. We'll see.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.